Welcome to another S&P 500 analysis. Today is July 15, 2022. The S&P 500 seems to be indecisive on where it wants to go. It's been alternating between up and down for the last 4 weeks. And with the start of Q2 earnings season, along with the upcoming FOMC meeting, the S&P 500 will most likely break away from this holding pattern. The question is, which direction will the S&P 500 break to, up or down? In this video, we'll look at the market sentiment, the internals, and the price action of the S&P 500 along with the other major market indexes and see what they are telling us about the possible direction the S&P 500 might be headed. Stay tuned. Before I begin, I need you to smash the thumbs up to help me promote this video on YouTube. And if you are looking for an objective, unbiased view of the market, then click the subscribe to this channel and be sure to click the notification icon to turn on notifications so you won't miss any of my future videos. And just a reminder, be sure to watch my S&P 500 trade watch video where I will give you some trade level to watch for the S&P 500 ETF, the SPY, the Nasdaq 100 ETF, the QQQ, and the Russell 2000 ETF, IWM. In addition, I will also present you with some trade level to watch for the upcoming week on Apple and Tesla. So be sure to turn on the notifications so you will be notified when I post this S&P 500 Trade Watch video. Now looking at this weekly chart of the S&P 500, as you can see, the range for last week was just a little bit over 159 points, and it lost a little bit over 36 points, or 0.93% for the week. And it failed this inside week breakdown. As you notice that previous week we had this inside bar and fell on the downside, trying to break down on the downside and then reverse back. And it printed a doji hammer for the week with quite a long wick. And right now it seems to reverse back to a one-time framing down and close below this declining 10-week and also this 40-week moving average. And it is still continue to holding this lower low and lower high price pattern and inside of this declining channel. So as far as the technical picture for the weekly basis, the trend is still down. Now let's take a look at the sentiment chart here. Looking at this sentiment chart, we see that the VIX is in the middle of this zone here, this 30-20 zone. It's pretty much in the middle. Look at, close at 24.23 on Friday. And also notice the put call ratio is trying to come down to this 0.75 level, ended the week at 0.8. So definitely the market participants are still being cautious, but not, panicky, fearful. And looking at the up-down volume ratio, we see that throughout the week, the first 4 days of the week was in favor of the downside. Only on Friday, we saw a up-down volume ratio of 7.6 to 1 in favor of the up volume. We did see a gap up on Friday here, and it closed Friday with 72-point gain or 1.9%. Still end up the week at a loss, but it recovered most of the loss on Friday. And looking at the advanced decline, there was a bond market participation on Friday with over 2,000 more advancing stock than declining stock. But other than that, on the first 4 days or the other 4 days of the week, it was pretty negative on Monday and Thursday. And for the new high, new low in the New York Stock Exchange, it wasn't too much. There was only 90 stock make new 52-week low and 9 stock make new 52-week high. So for the day on Friday, 81 more 52-week low than 52-week high. So it is not much going on here, really. When you compare to days back a couple of weeks ago, it was over 1,000, more stock making new 52-week low than 52-week high. And for the cumulative AD line, it was pretty much flat here. But notice that the closing, basis, on the closing close for the S&P 500, you see that it is closing at a higher low close here. So we'll see when we get a pretty much a higher high close next week and see would it be able to take out these pivot high and make a little bit of an upside move on the upside. And look at the Nasdaq 100 close up a 200 point on Friday at 1.83%. And it did have a up-down volume ratio of 3-to-1 in favor of the up volume. Was kind of mixed throughout the week. We got a couple of days with a little bit of upside in favor of the up volume and a couple of days in favor of the down volume modestly. For the advanced decline on Friday, it was 1,886 more advancing issue than declining issue. But on Thursday, it was 1,629 more declining issue than advancing issue. And also on Monday, it was over 2,251 more declining issue than advancing issue. So on the decline, there was quite a broad market participation on the decline side, as well as like on Friday with the advancing side. So those still kind of a little bit of a mixed bag. And for the Nasdaq new high, new low, similarly to the New York Stock Exchange, the number of stock that is making new low is also pretty small compared to the recent huge number up in the thousand. Right now on Friday, it was 170 stock make new 52-week low and 40 make new 52-week high. So not much to write home about. And as you can see, even on Thursday, the worst performance day for the new high, new low, it was only 429 more of stock making new 52-week low than 52-week high. And when you compare it back here, it was over 1,000. And similarly to the New York Stock Exchange, we're looking at the cumulative AD lines pretty much flat. And again, also we notice that the Nasdaq 100 is closed at a higher low. So we're essentially looking to see would it be able to get up and take out these pivot high and close at a higher close and see would it come up and try to get up to this 13,000 level. So overall, based on the sentiment, the market participant is still a little bit fearful, definitely not complacent, but they are definitely not in a panic mode either. And with the earnings season to start and also the FOMC meeting coming up, I think the market might try to run it up into those the FOMC meeting, because looking at the internal, it seems to be consolidating and staying flat to try to set up some kind of move toward the upside. Now, how much of an upside we'll see before the FOMC meeting, that would dictate to see what transpires between now and the announcement of the next interest rate hike. Now, the market is basically pricing in pretty much a 3/4 of a point or 75 basis point on the next interest rate hike, but there is the possibility of 100 basis point or 1%. So we'll see what will transpire when that day comes. Now let's take a look at the price action of the S&P 500. As you can see on this daily chart, the S&P 500 closed on Friday with 19.8% below its all-time high. So officially, it is not in a bear market. And we are going to take a closer look here on the daily chart, and as you can see, there are a couple gaps here. First is this Friday gap, and then we also have a gap down here, and then there's a huge gap up here. Now, looking at the internal that we just saw earlier, it seems like the S&P 500 might be setting up to break out of a little bit of a, this little consolidation zone here. And most likely, we are looking at the internal to seems to indicate that we might see some upside move. And if that's the case, then we'd be looking at the possibility of moving up toward this 4,000 level and fill this gap in the coming week. Or if it doesn't break out, let's say we see a little bit of a false breakout, then we could see it come down and fill these two gaps, the one down here from Friday and also the gap down here near the 3,700 level. So those are the upside and downside key level to keep an eye on. Is these gap here up at the 4,000 area, and the gap here near the 3,800, and also the gap here at 3,700. And for the Nasdaq 100, the Nasdaq 100 is still in a bear market territory. It is down so far from the high 28.52%. Looking closely at the daily chart, the daily price action of the Nasdaq 100, we see there's a gap up here near the 12,250, 12,300 level. So for the coming week, we're going to see will the Nasdaq 100 come up and fill this gap and possibly make it toward this trend line here and get into this 12,500 level. Now, if it could not get up to fill that gap, there is a small gap here from Friday down near the 11,800 level here. So be watching for that gap and see would it be able to hold that, or if it continue to come down, then look for this to move below this 11,500 and essentially come down to here near the 11,300 area for potential support tests. And the Russell 2000 is still in a bear market territory. You see that it closed down 29% below this all-time high here. And it is also just hovering around this pandemic high, pivot high, and kind of bouncing around this 50% retracement level at 1712. So you can see this is the pre-pandemic high here. And right now, the Russell 2000 is just sitting slightly above that. So we'll see, will the Russell 2000 continue to make its way back up, maybe possibly toward this trend line here and get up to this 1800 level and see would it be able to come up and fill this gap up near the 1850 area. Now on the downside, we're basically looking at this thing to see would it come down and retest the recent low down here at 1650. And the Dow Jones Transportation is also still in a bear market. It's been down 27.67% from his all-time high here. And if we take a look at the price action, the daily price action, we see that there is a gap from Friday here. So we'd be looking for this gap to see would it come down and fill this gap next week, or would it move back up and get back up to this 38.2 retracement level up near this 13,752 and possibly get back up to this 14,000 area. Now, if it unable to do that and continue to move back down, filling this gap, then look for the recent low to get retested at 12,760 and possibly come down to this 12,500 or this 50% retracement near the 12,363. And for the Dow Jones Industrial, the Dow Jones Industrial is in a correction territory. It is not in a bear market territory, only down 15.4% from its all-time high here. And right now it is sitting above this 38.2 retracement above the 29,794. And we take a closer look at the daily price chart here. We see that also has a gap on Friday. So if next week come down, we could look for this gap to get filled and see would it be able to hold above this 30,500. If it unable to hold this 30,500, then look for the 38.2 level, retracement level at 29,794 to possibly get tested, and essentially this recent low and also the pre-pandemic high. So somewhere around this 29,500 to 30,000. So those are the level on the downside to keep an eye on. And if we take a look at some of the potential upside, is for it to come up and see would it be able to come up and fill this gap here, this gap over here at somewhere around 32,000. So we'll see would it be able to come up and fill this gap in the coming week. And for the New York Stock Exchange Composite, as you can see, it's pretty much been bouncing off of the pre-pandemic high and also near the 38.2 retracement level, that 14,000 area. By the way, it is not in a bear market territory. It's only down 17.2% from its all-time high. So it's basically in the correction phase. If we look closely at the daily price action, it seems like it is putting a double bottom here. So keep an eye on this pivot high here, somewhere around 14,700. If we get above this pivot high, then look for the 15,000 level. But if we come down and take out the recent low below 14,000, then we could take keep an eye on the possibility of coming down and fill this gap down here near 13,450 area here. And that would be pretty much on its way down to this 50% retracement near 13,050. And looking at this 10-year yield chart here on a weekly basis, after having spiked up near the 3.5%, it's been kind of hovering around this 3% level. So with the upcoming FOMC meeting, we most likely see this 10-year yield starting to move back up toward the this 3.5 level once again. And looking at the U.S. dollar, you see that since the U.S. dollar spike up here at the high of 109, it is coming back down, and I wouldn't be surprised to see the U.S. dollar dip back below 107 and then consolidate down here near this 105.50 area for a little while before we make another push. And here we are looking at crude oil. Crude oil came down to this price zone here near the $90 area and got a nice bounce. And it's bouncing off from the recent swing here off the 38.2 at the 97 level. I'm basically looking for crude oil to come back up and work itself back up to this 124 area and move to this zone up here at this 130 level. Although a lot of people think that the oil might be coming back down to this area, and there's a possibility on the downside. But right now, I'm looking at the geopolitical stuff going on with oil, and so we're going to see like the oil get a little push back up. And here, looking at silver, it seems to be holding this $18 level here. So we'll see would it be able to continue to hold above this level here, 1780, and see would it be able to push back up to this 20.42 level here. But right now, definitely, I wouldn't be looking going long on silver yet. And for gold, I'm also watching to see how it's going to hold up on this zone here between 1716 and 1677 to see would it get a little bit of a base and then start pushing up, then maybe start looking for potential long location somewhere in this zone here once it have established itself that it seems to be able to hold above this price zone. So in summary, looking at the price action and also the internal, it appears that the S&P 500 along with the other major market indexes could be setting up for a little bit of a bounce to the upside into the FOMC meeting that will be happening in 2 weeks, and also some of the large cap tech stock reporting on the same week as the FOMC meeting. So we definitely could see the market maybe move up toward those news events. So I'll be keeping an eye on the 4,000 area for the S&P 500 on the upside, and the possibility of the 3,700 on the downside. So we're looking at 4,000 on the upside and possible 3,700 on the downside for the coming week. And be sure to keep an eye out for my S&P 500 Trade Watch video that I will be posting a little bit later in the weekend. And also smash the thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.